Hi, I'm Bert Nussbaumer from macrobeat.co.uk. I was about to talk about the US-China tension, but I have to briefly mention what happened last night with President Trump introducing 5% tariffs on all imports from Mexico due to the ongoing migration crisis. I mean, the market that has already been, rather weak from the US-China situation has reacted rather strongly, selling equities and risk in general. The peso itself lost about 3% so far and still weakening as we speak. The worrying issue for the market, and I think the reason why the market reacted that strongly is, we start to wonder whether, Mexico is the sort of final straw that broke the camel's back. For Trump to actually use the tariff weapon outside of trade friction and, takes it into the political arena on this migration crisis is rather worrying. The market may well wonder, how this story is going to continue and what country could be next. But nevertheless, I want to quickly do a temperature check on the global economy, and then we look at equities and some of the dollar crosses. On the first slide, I want to show you the global economic surprise index. We do see we had a dip early in 2018. During 2018, we started to recover. It started to look as if global growth were able to recover, for it to start tanking again in early 2019. This is really the sort of pulse for the global economy, so continued worries around the global economy. On the second slide, what we see is the similar surprise index, but this time it's a US versus the S&P. This is something I've been going on for quite a while so far in 2019, the dislocation between what the actual real economy is telling us versus the level of equities. And, needless to say, if you look at that chart, where your worry will be if you continue to worry about global growth, then equities are just far too high. On the next slide, we see the Dow Jones. We talked about this in the last few weeks. My idea that this 25,700 area is just a sort of flip-flop, trying to sort of create a peak on equities. And finally, now this week, we have taken out the double bottom at 25,200 and testing the very important 61.8 FIBO area at 24,950. As we speak, we're hovering around there as well right now on the back of all this Mexico risk off that we get. A break of this 24,950 would really start to opening the gates, and I would really be able to say that a tradable high is in place in equities. Doesn't mean like we're going to fall off the cliff right away, but it would just tell me that a top is in place and we start to really focus on a lot lower levels in the next few weeks and possibly months. On the next slide, we have the dollar index. The dollar index is hasn't been like moving aggressively higher, even though the channel would look as if it's a big move. It isn't in percentage terms. But what it shows is despite the weakening of US yields, with 10-year US Treasury yields now down at 2.15%, which usually would be weakening the dollar. Given we have the risk off element with the trade war going on, we obviously have dollar strength in the emerging markets. We have dollar strength versus some of the commodity currencies, the typical risk currencies. And there is a lot of dollar bears out there, but I would just say be careful, because reality is that while we have a severe risk off going on, it's very hard for the dollar to sell off. The dollar might eventually break lower, but it's not going to be any in the near term. The last slide I have for you is dollar CNH. I've chosen a month just to show you where we are in the channel space, so and explain why the 7 handle is very important. I still think the PBOC will defend that area. As you can see on the chart, you look at a 10-15% devaluation if that area breaks, and I don't think that's really the will of the Chinese at this very point in time. So I think these areas continue to hold, but it's the main focus that we have, and in that sense, that is really what I wanted to talk to you about today. And I wish you a very lovely weekend, and see you again next week. Bert Nussbaumer from macrobeat.co.uk. Bye-bye.